there, this is James and you're watching Tixee Live. And a very good morning to you all and a very happy Thursday. In today's little program, I want to discuss the aftermath of the Fed interest rate decision, monetary statement and press conference last night and how the market is currently reacting to it. Plus, I want to talk about a certain earnings report, which came out yesterday, and a couple of events which are happening today, which could be key market movers. But before we get into that, don't forget these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, yes, we had the Fed interest rate decision last night. And those of you out there who were kind enough to join me in an unusual broadcast, not my usual broadcast because I did it from home, saw what actually happened. And we watched the event together. And I've got a couple of questions asked. And one of the questions, of course, is have the Hawks have their wings clipped? Because indeed, though the Fed did indeed raise interest rates by 75 basis points as the market anticipated, and yes, indeed, now interest rate stands at 2.50, the highest level since 2009, it was really the monetary statement and press conference which the market was watching and looking for. Now, I said last night in my broadcast from home, I said there was two possible potential outcomes. They could be extremely hawkish and signal that rates will remain high and for higher levels for longer, and they will continue to push to their target for 3% in November, or it could be dovish, where the Fed recognizes signs that growth is declining, and that could bring downward pressure on inflation. So yes, the attention after the interest rate came out moved to the statement and press conference, and here's a couple of things which came out the statement and press conference. Excuse me, sorry, throat got really dry. Sorry about that. Anyway, they said recent indicators of spending and production have softened, so they're recognizing a potential slowdown in economic activity. They also then said, nonetheless, job gains have been robust in recent months, which is true, and unemployment rate has remained low, which is also true. It's still at 3.6. Inflation remains elevated. We know that it's 9.1, reflecting supply and demand imbalances related to the pandemic. Okay. Higher food and energy prices and broader price pressures are also affecting the market. It also went on to say it anticipates that ongoing increase in the target range would be appropriate. So basically, they are saying they are looking to increase interest rates further. And they said, however, this is what the market then took as dovish. The committee will continue to monitor the implications of incoming information for the economic outlook. In other words, they're going to start paying attention to other data, not just the job market. And this was the kicker. This was the kicker. This is what's given the market a bit of optimism after this event. This was the kicker. The committee, and they said this, the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. What does that mean, James? Well, basically, how the market has read this, and it's like what I said last night when I was doing my broadcast when this event happened. Basically, they're saying if the data comes in very, very negative, other things, not just the job data, then it will affect their decision on interest rates, how aggressive they're going to be or raise rates at all. And this is what the market is reading into this. So basically, they're saying every decision, okay, from now on will be meeting to meeting and data-driven. So basically, the market is taking it that it's sort of rejoicing that they think, okay, this is how the market's thinking, that the Fed is going to slow down on its aggressive stance to inflation, okay? And its aggressive activity of raising interest rates. That's how the market is seeing it. And this is why we're seeing the market rejoicing a little bit. However, and we'll look at the market in a moment. However, I still think that we're maybe looking into this a bit too much. Though, yes, that statement and the press conference was a little bit dovish, Powell was still extremely hawkish. He still is hawkish against inflation. So I think the market's overreacting a little bit in thinking that, yeah, they're going to slow down and maybe even pause raising rates. I think we're overreacting on this. And as well as that, who's to say that the data that comes in is not good? Not good. Say we do get a very good NFP reading next week, again. So we can't think, that we're assuming the data is going to be negative and that's going to slow them down, but that's not necessarily the case. So I think we're overreacting. But anyway, for now, let's have a look at the markets, because at the moment, on the back of the statement and the press conference, indeed, the market was bullish. You see the euro, as you see, it was struggling before the press conference around this level. It skyrocketed back above 1.02029, finding a bit of selling pressure at the moment. So it did have a bullish momentum on the back of this. Again, the market went risk appetite, but still the euro, it's got its own problems, of course. I think the target really for it to become proper bullish again is 1.02684. The cable as well also reacted very favorably. It's now got a second key level of 1.2197. So yeah, that reacted positive on the back of the Fed announcement. Gold, of course, my favorite. Oops, a daisy. What's happened here? Excuse me 1 second. Gold, of course, is now back above that key level I was watching on the back of this statement. Is now trading at $1,746. Again, on the back of this Fed announcement. S&P 500 reacted very positively, back above 4,000 point level, currently trading at 4,010 points. So yes, market is rejoicing at the moment, but I think we're overreacting just a little bit at the moment, but only time will tell. Sorry, I'm really thirsty. Anyway, so other news. Okay, Meta. Oops, wrong one. Meta had its earnings late last night. And yes, it did indeed miss expectation. Okay, miss expectation. Similar to Twitter, similar to Snap Incorporated. In fact, revenue was announced at 28.8 billion versus 28.9 billion expected. The market was looking at the same time as that, their third quarter forecast, failed as well to 26 billion versus 28.5 billion expected. And that disappointed the market because the market was looking for a forecast around 30.32 billion. They've also said, and this was the big problem for them, and it's been the problem for Twitter and for Snap, the only online company which hasn't fallen prey to this. They also said the main problem was this: the average price ad fell 14% year on year. They also said they lost 2 million active users. So that was a big drop off. And net income fell by 36% year over year. So not a good earnings report for Facebook. It's falling into the same trap as Twitter and Snap Incorporated. Anyway, next up, we have Apple, which is tonight, and Amazon tonight. Amazon will be extremely interesting, especially after what Walmart said a couple of days ago in reference to consumer spending habits. So that will be extremely interesting to watch. Other major events to keep an eye on for, of course, we have obviously German GDP happening today, US GDP, German EU GDP, and EU CPI. And of course, the big one today is the US GDP, which I will be doing a watch along. So please come along and join me for that. I'm going on air at 12:20 p.m. UTC. Should be a big event. Let's see how good it is or how negative it is, and whether that changes the market's mood in reference to the press conference and monetary statement from the Fed last night. The market, as it currently stands, the FTSE slightly negative, 0.51%. DAX currently trading slightly higher, 0.15%. And Eurostoxx 50 currently trading at negative 0.12%. There you go. Don't forget, you can ask me questions anytime you wish. This is a live broadcast after all, and live does mean live. Or you can simply say hello. Simply say anything like that if you like. Don't forget, as well as that, if you think of a question later, put it in the comments below on either Facebook or YouTube. I will see the question and I will reply to the question next time I'm live on air. Okay, as there is no questions at the moment, not a problem. Not a problem. So like I said, I'll be back online again at 12:20 p.m. UTC to do a watch along of the US GDP, an event which I think the market's getting very excited about and potentially could be a key market mover. So please join me for that. And don't forget, after that, I'll be back on air again around 1:30 to 2 p.m. UTC to cover the US Open as well. Anyway, till next time, as I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you've put up with me, my over the top enthusiasm about the markets, and you enjoyed it, give me one of those. It's nice to know that you like what I do. I can see I've got a like already, which I really appreciate. Anyway, till next time, remember these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.